is a great walkthrough of how to start investing as a Canadian, and really what you should be aware of when it comes to investment fraud. So things that are illegal or bad, that bad actors might try to steal your money. So we're going to run through how to start investing, what you should consider, and how to stay away from bad actors. Okay, share my screen. Okay. All right, so starting your investing journey. And before we dive into more information, I just want to let everyone know that today's presentation is to provide helpful information about securities, and that's investments, but is not intended to provide legal, accounting, or other professional advice. If you would like more information about the types of investments you would like to use, you can always talk to a financial advisor and they can give you a more dedicated look at your own investing options. So I highly recommend doing that. So as Ronnie had mentioned, I'm from the Alberta Securities Commission. And if you have not heard of us before, that is okay. We get that a lot. The ASC is the regulatory agency responsible for administering the province's securities laws. So that means we put out the laws around investing here in Alberta. We have about 200 employees who create and enforce these laws, rules, and regulations that govern the Alberta financial markets. So when you invest in Alberta and you buy stocks or you buy mutual funds at the bank, you're investing through the capital markets that we govern over. And because we're not trying to sell you any type of investment product, we can provide independent, unbiased information and tools to you. So today, I'm going to provide you resources and information so you can approach investing the right way for yourself while avoiding fraud. Additionally, I cannot provide any type of advice as to what investments make sense for you, but we will talk about the different investments available and you can figure out which ones make sense to you. So today, we're going to be talking about basic investment information, ways to manage and invest your money, how to invest safely, because that's important, common investing mistakes, the fraudster's playbook, and a fraudster is someone who tries to put out fake scams to try to steal your money, and they'll try to use investments as a way to get you to hand over your money and for them to take it. It happens a lot. So we're going to learn about what those situations and what they do. And finally, how to report an investment scam. So I've mentioned it already a few times, but I said the word securities. What is a security? Well, a security is a financial instrument that holds some type of value. It is some type of element of finances that has a value on it. Now, when you're thinking about it and you're thinking about investing, you might think of stocks. That is correct. That is a security. But you can also think about bonds, mutual funds, ETFs, loans, and promissory notes. The one thing to remember is if you're giving your money to someone with an expectation of more money on top of that coming back to you for giving that money over, that is a security. So remember always that giving money with the expectation of a return on top of that money is a security and has to follow securities law. So one thing that's important about this, and the reason why I talk about what a security is because fraudsters like to change and manipulate what a security is and what they're offering you, so they don't have to follow securities laws. Remember that if you want that expectation of return there, that it does follow securities laws and you have to make sure that they are registered. We'll go into more about what that means. So why do people invest and why should you invest? Well, investing is a great way to grow your wealth, but the way to look at investing is it's a part of a healthy financial future. So really, you're providing yourself with personal greater freedom, you're helping your family, you're creating a sense of security by growing your wealth through investing, and it gives you the ability to afford things in life, like a healthy retirement. So when you're thinking about investing, don't think about investing as a way to get rich quickly. If you think like that, you might involve yourself in with an investment scam and unknowingly lose your money. What you want to do is focus on goals you want to accomplish in your life. If you want to have a nice retirement, if you want to save for your child's education when they go to post-secondary, like college or university, there is great options for you to invest in different kinds of accounts, which we'll talk about. So when you think about investing, think about it as a way to achieve some of your goals as new Canadians, ways to afford a house or to afford a trip in a coming year or two, or for your retirement. There's a lot of great goals, but make sure you design that financial plan with your goals on it. So part of helping you meet your goals with your investing journey, the Canadian government has created both unregistered and registered accounts to help you do that. So we'll talk about these accounts now. The first is a TFSA, and this is a tax-free savings account. And this allows you to have all your investments in it, generally tax-free. So you're not paying any money to the government once you are cashing out or selling off your investments for a return. This is great, as it's worth noting that you get to keep all of that money yourself and you're not paying taxes on it. That is a really big thing for investors. The other thing to know is that there is a contribution room limit. If you were in Canada and you were over the age of 18 in 2009, the contribution room would be $75,500. $75,500. And every year you get $6,000 added more onto your contribution room. That means you can put that much money into the account and grow it. Thing to remember is if you're 18 after 2009 or you've come to Canada after 2009, that number will be much smaller. A great way to find out how much contribution room you have in your TFSA is to look at the CRA website. You can create an account and log in, and it should tell you how much you can contribute to it. The next is the RRSP, and this is the Registered Retirement Savings Plan. Now, this is an account that's designed to help you save for your retirement here in Canada. You can invest in it with taxes deferred, so that means that you don't pay taxes on the money you put into this account until you're in retirement when you withdraw the money from the account. This is great because when you're in retirement, you make less money, so you'll be paying less taxes. And the money you would take out of your RSP will be less taxed. That's good for you. The way that contribution room is decided for your RRSP is 18% of your earned income from the year prior. So if you're new to Canada and this is your first year here, you might not have any contribution room for your RRSP till next year when you have your taxes filed. The next is RESP, and this is the Registered Education Savings Plan. And this is a fantastic way to save for your kids if you have them. This is a great way to save for their post-secondary education. So if they go to college or university or trade school, what's happening here is that this account is designed by the Canadian government to help foster you to save for your child. Every year that you add money into the account, they will match it 20%, up to a total of $500. So if you put $2,500 into your RESP for your child, you can get $500 every year, up to $7,200. That is great. That is a lot of money coming to you just from putting money into the RESP. Highly recommend it if you have a child in your life and you would like to try to save for their education. One thing I'd like to note is all of these accounts can be utilized in a variety of ways to help you. And you do not have to put some type of set amount. You can put in what you can afford. If you can only put $20 into your child's RESP every month or 2 weeks, that's okay. As long as you're contributing, because over time that money adds up And investing grows your money over time. And that's a big thing. So we're going to talk about what that means. Oh, and finally, one last one I wanted to talk about was the unregistered account. An unregistered account is an account where you can put in as much money as you want to invest. But the thing to note here is that it is taxed at your marginal tax rate. So at what your tax rate is right now, 50% of what you earn from your investments will be taxed. So definitely recommend opening up a TFSA or an RSP if you're saving for retirement or if you're looking to have tax-free investing. And then look at unregistered accounts if you have no more room left in your TFSA. Okay, so I talked about investing and growing your money over time, and no matter what you contribute, the longer you keep your money invested, the better. It's because of the term compounding interest. And a fun fact was that Albert Einstein called compound interest the eighth wonder of the world. And so he thought it was a magical thing, amazing. So what is it? Well, compound interest is the additional value generated on your original money that you put into the investment, plus the interest that it has already made in a previous period. So when you think about it, think about your money growing 5% in 1 year, and the next year it grows another 5% on that original amount of money and that additional money you made the year prior. That adds up over time. So let's see how that works. We're going to look at two people, Tracy, age 20, and Donna, age 35. So Tracy begins investing at the age of 20. She puts away into her investing account $167 a month. And her investments bring in 6% a year. She stops investing at the age of 65. If she did that every month from 20 to 65, she would have $426,000 in her investing account. With that compounding interest would generate $336,000. So most of the money she earns is from compounding interest. That's pretty incredible. Now let's talk about Donna. Donna invests a little bit later at the age of 35, and she puts $167 a month into her investing account, and it returns 6%. She invests till the age of 65. Look at the difference. She only brings in $158,000. And of that, just under $100,000 is the compound interest. So the point I'm trying to make is that the amount of time you keep your money in the market, the bigger it grows. So never think about investing as something where you have to invest to get in quickly and buy a stock and sell a stock right away to make money. If you invest for the long term, you can be successful. Now, if we were to think about Donna and trying to match how much Tracy brings in at the age of 65, she would have to put in $450 a month to match that amount of money that she earns over time from compound interest. So remember, it's about not how much you put into your investing account, but it's about being consistent and really doing it for the long term, thinking long term about how you want to reach your goals. And when it comes to investing, a lot of people think that investing is only for the very rich or for people who have a particular knowledge or understanding about investing markets. That couldn't be further from the truth. You can start investing at any age as an adult, so 18 and up. So at any age, 18 and up, and you can put in any type of money you can into your investing account. If you were to just put $25 into your investing account with that same 6% return, at the age of 50, you would have $23,000 just from $25 a month. So when I say that investing is for everyone, I really do mean it. You can start at any time. So I'm so glad that everyone's here for this presentation to learn about the fundamentals of investing. So there are a variety of investment types, and depending on your preference, risk tolerance, so that's the ability for you to take risk with your money. Remember, everyone has different levels of risk that they can put their money towards. And financial planning goals, so the goals you have really shows you what types of investments you should and want to use. So let's walk through some of these. One of them is called cash equivalencies. And these are generally very secure. So these are very safe investments that have very low risk with very low returns. So you're not going to make a lot of money from these, but you're not going to have much risk. And so if you don't have much risk, or you don't want to, you want to make sure your money doesn't lose in the market, a cash equivalency is a very good thing. Great examples of these are money market funds and GICs. The next is fixed income securities. And these are investments that are like lending your friend money and them giving it back to you with additional fee for borrowing the money. It's the exact same thing, but you're doing it with companies. So when you buy a bond, you're buying a deal with a company that's going to pay you back after a set amount of time. These are also low risk, but have a little bit higher return than cash equivalencies. The next is equities. And these are what everyone thinks about when it comes to investing. These are stocks or shares, and they represent the part ownership of a business, which is pretty cool. When you buy a stock, you're buying a piece of a company. And when you're talking about equities, you make money in two ways. One is through the profits from the company, and these are called dividends. And they are paid out to you every month, quarterly, or annually, depending on the security or the stock you're looking at. The next is through selling the investment. So you sell that share. And if it's grown in value, so if the share was $4 and it came up and the share increased to $6 and you sold it, then you'd be making $2 profit. Great examples of these is common shares and preferred shares. One thing to understand about equities is that there is variable risk. So the risk is always different because there's a lot of different companies out there, and all the companies have different levels of risk based off of what they're selling, their competitors, how they're doing financially, so how much money they have, how much debt they have. All of these plays into the risk that they face. So it always pays to research into these companies and understand how they work. The next is investment funds. And these are actively or passively managed. So actively means that a financial advisor is picking the different types of investments within it, or they are passively managed. So they're just a list of investments that never change. These are great because if you think about it, when you're talking about stocks or shares, you're buying one egg and you're putting all your hopes into that one egg. Where an investment fund is like buying a basket of eggs. You're not focusing on one egg or one company, you're focusing on a lot. And that helps you make less risky investments and grow your money over time because you're not focusing on just one company. It's a very good way to go when it comes to investing. Examples of this are exchange traded funds and mutual funds. And finally, alternative investments. Now, you may have heard of these. These are things like cryptocurrency and foreign currencies and hedge funds, gold and real estate. These offer higher potential for returns, so higher potential to make money, but also higher than average levels of risk. So there's a greater potential that you could lose your money with these types of investments. It's recommended that you don't start with these types of investments when you are just coming into investing. Start slow and make sure you pick investments that are right for you. So now let's talk about key investment terms. And so these are terms that are really important to your investing journey. The first is diversification. And this is an investing strategy of utilizing a variety of different types of investments. So GICs, stocks, investment funds. And really what you're doing is you're spreading out your risk and driving steadier returns. So remember, you're not putting all of your focus on one company and all your money on one company. You're spreading it out to a bunch of different companies everywhere. This is very good and can help you make sure that you don't get too risky with your money. The next is portfolio. And I've mentioned this a few times, but this is a collection of your investments. So think of it as a garden, and your investments are the seeds. So you want to plant a nice garden that has everything you need for all of your goals through life. The next is risk versus reward. Now, this is something that is very important for investors. You must always remember that with the promise and the opportunity of a reward, so growing your money, there is a level of risk. So when it comes to investing, higher the risk, the higher the potential. So the higher the opportunity for a reward. Doesn't mean it's a guarantee. The lower the amount of risk, the lower amount for a reward. So always think about the opportunity that you have with an investment, but also the chance that you might lose your money. Only invest what you can afford to invest. And if it disappears, it wouldn't hurt you. Don't invest what you can't afford to lose. Next, capital gain, we talked about that. That's when you sell your investment and it hasn't grown in value. That means that the value is given to you. So if a stock went from $4 to $6 and you sold it, you'd get $2 in profit. The next is return, and this is the profit you make on an investment through interest, dividends, or increased value of the investment. And you can see this on your statements if you invest through your bank or through the online brokerage, they will also tell you this. And interest rate is the rate expressed as a percentage you earn on money you lend or hold in a fund. It can also be a rate a lender charges to borrow money. So a great thing or a great example of this is a credit card. A credit card has an interest rate, and the average in Canada is about 19.99%. That means that the money you borrow, they're going to charge a fee of 19.99% per year for you to borrow that money. So the same thing happens with investing. You have to remember that there is a level of interest rate that you can get from an investment, and they'll show you how it's done in the past. So let's talk about ways to manage your money, because we just talked about the types of investments that you can take out, but there is different paths to how you go about investing, and this is equally, and if not more important for you as an investor. So the first is financial advisor. Using a financial advisor for your investing journey allows you to lean on someone who has the experience of investing and the knowledge to invest and help you. They can help define and roadmap, so create a plan for you and your investment strategy. That means they also create the types of products and investments to help get you to your goals. So these are really great because if you do not know how to pick the right investments for yourself, talking to a registered financial advisor at a bank or a firm can help you figure out what your plan should be and the types of investments that you should use. Very, very helpful. The next is DIY investing. And if you have experience with investing, this is a great method that allows you to manage all the investments and pick them out for yourself. I have to say though, that for new investors, DIY investing is very hard and could seem overly complex. It's something that maybe you can start later on after you get more comfortable with learning the terminology of investing here in Canada, as well as the different accounts available for you. And finally, robo-advisors. And these are really unique and interesting as they are relatively new to the market. These are actually created through mathematical algorithms. So they are made through special math and computations created by wealth managers and financial advisors. So what does this mean for you as an investor? Well, robo-advisors allow you to go and log in and answer a questionnaire about yourself. This will talk about your goals. This will talk about when you need to obtain your goals. So say retirement, if you say, I want to retire in 20 years, they will design a portfolio of investments for you based off of your questions. So what you get at the end is an investment portfolio with investments in it that you just have to contribute to on a bi-weekly or monthly basis, and they will buy the investments for you. Makes it very simple for you. Very great option. So one thing to remember about these different options of investing, with a financial advisor, you have to be very open about what your needs are from your investments. Make sure you're honest with the advisor about how much you can risk with your money. If you do not like risk and you want to make sure that you are in very safe investments with very low risk, make sure you tell that to your advisor. They will also do a questionnaire, so they'll ask you questions to help figure out what that is. Be honest and open with them, because this is an investing journey for you. So you want to make sure that they are giving you the right investments to meet that expectation. With do-it-yourself investing, so investing on your own, it is very hard to stay focused and it requires a lot of research. If you're very busy and you don't have time to look at investments and research them, then this is probably not the best option for you. And finally, robo-advisors. These are a great and easy alternative to investing on your own. By utilizing a robo-advisor, you're getting a pre-made investment portfolio that you can just contribute to. That can help you take a lot of load off of researching investments and make sure that you have an investment portfolio that's diversified, balanced, and really set to meet your goals. So great option here. And the thing to remember is that it's not personalized to you. You're getting a template portfolio that a lot of people utilize. So if you want something that is strictly just for you, and it's designed for your needs only, you might want to use a financial advisor. So these are the 3 ways to manage money when it comes to investing here in Canada. I highly recommend that you think about robo-advisors and financial advisors as a great place to start and to help learn about investing as you get started. So how to invest safely? Well, at the Alberta Securities Commission, we focus on 3 main things when it comes to investing: check, protect, and invest. And we're going to walk through what these are. So check is really about checking registration. Here in Alberta and in Canada as a whole, we expect that our financial advisors have registration. This makes sure that they are acting accordingly to securities laws and that firms and brokerages and financial institutions have protections in place for you to make sure that your money isn't defrauded. So that means your money is stolen. So it is always important to always work with someone who has registration. Now, if you want to check a registration, it is a completely free thing you can do by going to checkfirst.ca. This is the website for the Alberta Securities Commission Investor Education. Here on this website, it takes about 2 minutes to search up a person or a firm or financial institution to check if they're registered. Very important step to do. Next is to check the disciplinary history. If you're working with a financial advisor or someone is offering you an investment, make sure you check their registration as well as their disciplinary history. This will tell you if they have broken any types of laws when it comes to investments. And when you check registration, this will pop up, so you will see all of their disciplinary history. Next, once you have figured out and found out if the financial advisor is registered, it's great to ask them questions about how they'll help you. Ask them, how are you going to help me reach my goals? What are the types of investments that you propose for me? And ask them, what kind of clients do you have? If you're older and you're closer to retirement, ask them, do you work with people who are close to retirement? Or if you're new and you're younger to investing, ask them, hi, I'd like only low risk investments. Can you help me with those types of investments? They should answer this and tell you what best solutions they can provide you, or if they are not the right financial advisor for you. This is always a great time to ask those questions to make sure that you're working with the right person. And it's important to ask, how are you paid? When it comes to working with a financial advisor here in Canada, it is important to remember that they are always paid in some way. They are never free. So they are either paid on an hourly basis, so you pay them every hour you work with them, or they're paid through a commission on your investment portfolio. So that means that they take a percentage from your investments every year. Make sure you understand what this amount is and how that will look over time. Make sure that you're comfortable with it. At the end of the day, you do not need to work with any financial advisor that you're uncomfortable with. Make sure you work with someone that you like and you like what they're offering you. And I just want to remind everyone that, again, it's so important to check registration. Just under 1 in 5 Albertans check registration. And it's a great way to stop investment scams right in its tracks. Please check registration, and you can do that at checkfirst.ca. The next step is protect. Do your homework. When it comes to investments and someone has offered you an investment, or you're looking at investments that are in your investment portfolio when you're working with a financial advisor, it's always important to just do your research around them. So check if it's legitimate. So do your research, go online, look them up and see if they are real public companies that are trading on the stock market. See the news around them, if there's any types of articles or newspaper articles on them. Make sure you understand the company before you ever hand over your money. It's a great way to see if it's right for you. Understand the industry and company and investment. Make sure you understand what they're offering, what they're doing in the market. All of these things are really important to understanding if an investment is right for you. And does it fit with my investment goals? Remember, when it comes to investing, you want to tie it to goals in your life, whether that's retirement, whether that's saving for a house in 10 years. All of these things can help you figure out if the investment is going to grow in value by the time you need to utilize it. So make sure you understand, does it fit with my goals? Or is it too risky and doesn't fit with my goals? Are there any hidden costs? Make sure you're very upfront and ask any financial advisor or person you're working with, what are the fees involved with these types of investments? That can help you understand how much you'll be paying towards them. Are there any, does it sound too good to be true? This is very important. If the investment sounds really, really good and you cannot see any type of risk, remember, investments have some level of risk. If you can't find what that risk is, you might be dealing with an investment scam. So always take some time to review an investment. And if you have questions about it and you're unsure if it is risky, you're unsure if it's real or not, you can always contact the Alberta Securities Commission and we can help you. And remember, have a financial plan and research your investments before you ever hand over your money. This is important because this will stop investment scams in its tracks. You always want to make sure you're checking registration and you're checking the investment to make sure it's real. So remember these tips. Ask questions and demand answers. So if you're asking your financial advisor questions and you're not getting the answers you need, ask them again and ask them to explain it more clearly for you. If they are unable to do that, it might not be the right advisor for you. Find one that you can work with and gives you the proper answers for investments. Next, stick with your own investment goals. When it comes to investing, this is your personal journey. This is something that you're taking on for yourself and your family. So make sure you design the goals that you want to accomplish. Next, remember to do your research into those companies. If you're investing in investment funds, for instance, always look at the investment fund fact sheets. Always do this digging into these different companies and different investments to make sure you understand how they work and if they have the opportunity to grow for you. Be skeptical. Watch out for red flags. We're going to talk about what those red flags are. Talk to others about finances. If you're ever confused about finances and investing, feel free to reach out to the Alberta Securities Commission at checkfirst.ca. We can always help you with any questions you have, but also you can go to your bank and talk to your financial advisor there or a bank manager to get a better understanding of these different types of investments. Don't feel like you have to do this alone. There are people out there who can help you. And don't be a victim of your own manners. So don't feel that you have to say yes to any type of investment that's offered to you or to any type of financial advisor who talks to you. You do not have to work with them if you are uncomfortable or you do not like the investments. You can always have a choice in what and who you want to work with and the types of investments that you purchase. And finally, don't be fooled by appearances. Fraudsters and scam artists like to look successful, so they dress in nice clothing, they might drive a nice car, they might be very nice to you and try to be your best friend. Remember that you can't let their appearances deceive you. Always keep your finances to yourself and make sure that you understand that new people who try to talk to you about your finances might not necessarily be the correct individuals to talk to. In this case, if anyone's offering you investments, always check their registration. So you can check on checkfirst.ca, and this will help make sure that you're dealing with right people. If that person is not registered, you can always contact the Alberta Securities Commission. But remember that you don't want to hand over your money to anyone without doing those checks and understanding that they are registered and that they're working in their best interest. There are a lot of bad apples out there. When you're done all the steps, then you're ready to invest. And it sounds like a lot of work, and it is, but you have a lot of organizations here to help you. If you ever have questions about investing, you can always contact the Alberta Securities Commission. So, common investing mistakes. Investing before researching. If you don't do that research beforehand and understand if the person you're working with is registered, that is a big no-no, and you could work with someone who's just trying to steal your money. Always do that research beforehand. Remember to identify your financial goals. What are you looking to achieve with your investing? By understanding what you want to achieve, the better you are to set yourself up with the right investments. And when you talk to a financial advisor, by giving them your financial goals, they can give you the right investments to do that. Getting caught up in unsuitable investments. When you think about the return element or the reward of an investment, but you don't think about the risk, that can leave you with investing in things that are not safe and could be very, very risky. Remember that we want to invest in things that can help us grow our wealth. We don't want to risk our money with unsuitable investments. Not knowing your risk tolerance. If you would like to understand what your risk profile is or your ability and willingness to take risk, the checkfirst.ca website has quizzes that you can take to understand what your risk tolerance is. This is a very good thing to know so you can understand how much money, how your personality works with money and how much money that you can afford to the different types of risks involved with investing. Always know what your risk tolerance is. Never ignore your risk. This is another important thing. If you know that you do not like risky investments, don't try to go outside of that, because that will leave you investing in things that could possibly lose you a lot of money and keep you stressed. So leave you anxious. You never want to be anxious when it comes to investing. So invest within your risk tolerance. Having too few or too many investments. Now, this is something where a lot of people, if they're investing on their own, they'll might buy too many or they'll invest in one company. A great way to approach this is to start with maybe a financial advisor or with a robo-advisor, where they create a diversified portfolio for you that has all investments you need and you don't have to pick anything out. Remember, you want to approach this in the way that's best achievable for you and is something that you can manage. So always talk to maybe a financial advisor or a robo-advisor for your investing journey. And ignoring investment fees. These fees can add up over time. So make sure when you're investing in any type of like mutual fund at a bank that you ask them, what are the fees here? And they will tell you what the fees are for the different types of investments. Very important. And not monitoring your investments and their performance. When working with a financial advisor, make sure you ask them, how is my investment portfolio performing? You can ask this anytime you like, and they should provide you with a return statement that will show you what your investments are doing. It's always good to understand what those are. So now I'd like to switch gears and ask a question about fraud, because a lot of people don't understand that investment scams happen here in Alberta, and they target everyone, especially new Canadians. So I'm going to ask a question and I'll turn it over to the attendees to guess an answer. So what percentage of Albertans believe they've been approached with an investment opportunity that may be questionable, not entirely real, or potentially fraudulent? Does anyone want to make a guess of what the answer is? 3, so C, 25%. Anyone else? Holly, D, Sandra, D, Veronica, D. Okay, so we got a lot of people who are pessimistic. You are all correct. It is D, 48%. That is a high number. And that number increases to 54% for Albertans aged 45 to 64, and goes up to 60% for Albertans aged 65 and over. That is a lot of people. And so the thing I want to really stress here is that investment fraud does happen, and you might come across investment offers that are offered to you that are completely fraudulent. And this can come in through a variety of different ways. So we're going to talk about all that, but this is very important to understand that this can happen to you and is very serious. Okay. So the Alberta Securities Commission created a great playbook that everyone here can utilize. It's called the Don't Be Fooled by Fraud Playbook. And I believe it will also be provided to you after this presentation, but it provides you with all the different steps that a fraudster will take when they're trying to steal your money. And so it will tell you all the steps they take, but also actions you can take to keep your money safe. So how to step back from a situation, how to check registration, how to report it to the Alberta Securities Commission. These are all very important. So I highly recommend everyone take some time after the presentation today to read this playbook and keep it with you. It's very important, and it shows you how every type of investment scam really kind of works. So to go through it quickly, fraudsters work in 7 ways to try to steal your money. The first is they identify a possible victim. So really they're looking for someone who might have the fear of missing out on an investment. They might target someone who is new to Canada and wants to start investing but doesn't know how. They might target someone who is worried about their retirement and having enough money for their loved ones. They really try to find that angle where they can get in with you and get close. Once they understand what type of issues or thoughts you have about money, they try to befriend and earn your trust. At this step, always be cautious of anyone who takes a very strong interest in your finances without you asking. When they start asking you questions about every detail about your finances, they might not be your best friend and they might be trying to steal your money. Once they've earned that trust, they move into showcasing the benefit of investment. Here, these fraudsters will try to talk about how they made their own money with this investment, how it can help solve your issues in life with this investment, and they talk a lot about it. It's always important to know that when it comes to any investment that comes your way, if anyone tells you about investment or offers you one, that they have to be registered to do that here in Alberta by law. So always contact the Alberta Securities Commission, even if you're unsure. Next, they offer the opportunity. So they say, hey, I can get you in on this investment and make you a lot of money. Trust me, if you're new to Canada, you want to make a lot of money, and they'll try to get you in like that. Remember, they have to be registered. Once they receive the money, they start to back away. They start to not answer phone calls. You might not be able to see them anymore. They'll say, oh, I'm really busy. They'll say you can't have your investment because it has to stay in longer. They will make up a bunch of excuses to keep your money. Eventually, you start to see that they have disappeared completely and you cannot call them, you never see them, and you can't get your money back. Most people understand that they have lost their money to a scam. What they don't know is that there is a step 7, which is they target the victim again. This is where the fraudster will contact you and try to act like they are police services, or they'll try to act like the RCMP and say that they can get your money back for a fee. This is completely fake, and this fee is fake as well. Anyone who's defrauded, if they pay this fee, the fraudsters take it and just disappear again. So never pay any fee. The Alberta Securities Commission, the Calgary Police Services, the RCMP will never charge you a fee to help you if you have been involved with an investment scam. So make sure you remember that.
James, I just want to point out we are at the kind of 10 minutes to the end of our session, and we've had quite a few questions come through in the chat. So just doing a bit of timekeeping.
Thank you. I'm going to move it all the way to the end, and we'll follow through with questions. So common ways of being approached. There is a variety of different ways. You can have investment scams come to you through friends and family, social media and online associations and chat rooms. Make sure you understand that any of these investments that come your way, that you understand where they're coming from and if that person is registered. You can also see them come through cold calls and emails. Never ever invest in anything that comes to you from an email or phone call. These are most definitely a scam. And in advertisements, keep clear of any advertisements and investments that come through those. They are most likely scams. So these are ones I want to quickly touch on, and then we'll move on to the questions at the end. Red flags of fraud. Always remember these key things. If anyone promises you to make a lot of money and there's no risk, that is a clear sign of fraud. Additionally, anyone who says that you can invest and make money tax-free, remember you have the tax-free savings account, but other than that, there is no such thing as for tax-free investments. Stay away from those. Exclusive offers. If anyone's offering you investment and saying this is just for you, they're just trying to keep you from researching and talking to others. Remember, any type of exclusive offer is not safe. Lack of registration, very important. You have to be registered to offer any type of investment here in Canada. And I'm going to touch on one more thing. Affinity fraud. This is very, very important. This is the most prevalent type of fraud we see. And this starts close to home. This scam is really about a fraudster trying to earn the trust of a group. So whether in a religious organization like a church, ethnic communities, social clubs, professional associations, what they do is they sell their scam through the different friends of the group. So what happens in the end is you might have your friend of 10 years who's come to Canada with you, who has invested in the scam, unknowingly try to get you involved in the scam as well. Remember that you don't want to invest in anything where you don't know where it comes from and if that person is registered. So always ask, where does this investment come from? And check if that person is registered to be offering that investment. Never invest because just your friends or family have done that. Always check. And I just want to remind everyone that checkfirst.ca has a wealth of great information for helping you with your investing journey, video learning series, quizzes and calculators, fact sheets to help you learn about what we talked about today, and that check registration tool. If you have any questions about an investment that you think is suspicious, or you invested in a company and you think it could be fraud, always contact us. We are here to help you. That is our job. If you're not sure if it's a scam or a fraud that you should be contacting us about and should go to a different organization, contact us anyways, and we can direct you to the right organization. But always, always contact us if you have become a victim of fraud, because you shouldn't suffer in silence. We are here to help you, and there's other organizations to help you as well.
James, with that was absolutely fantastic.
Perfect.
I'm just going to move us quickly through some of the questions that have come through, but I'll read them for you so you don't have to hunt for them. Sure. Are refugee claimants eligible to open a TFSA? That is
a good question. I will, if you could get the email address of that person for that question, I can follow up with a subject matter expert to give you the exact details on that.
Okay, we will make note of that. Perfect. Can you elaborate a little on TFSA? Is the interest you earn tax-free, or is all money you put in the TFSA tax-free?
So all the interest you earn is tax-free. If you just use it as a savings account and you put your money into the TFSA, there's going to be no taxes on it. If you make money off of investments in your TFSA, that generally will not be taxed. No.
So regarding the RESPs, when government adds 20% to one of those accounts, an RESP account, is that extra 20% considered interest earned?
No, so that is a grant that's given to you, and then you can take that money and invest it more, or you can just leave it sitting in the RESP, but it's not considered interest earned on your investments. When they give you your investment performance, it doesn't include the grant money.
Thank you. How come different banks have different interest rates for TFSA if it's governed by the government?
Great question. So TFSAs are really an account that you can open anywhere, and different banks will offer different incentives for you to save in them. So they'll offer a savings account within a TFSA that has a savings rate, and those are different for different banks. They just offer different competitive rates, but they have to stay within a set amount. So they won't differ too much, but that's a savings account. That's not an investing account within a TFSA. And so they're allowed to offer those different rates here in Canada.
Thank you.
I hope that answers that question. Yeah.
Is dividend earned taxable?
Yes, it is. And so it depends on the account. In a tax-free savings account, it's generally not. If it's an American company, there is a 15% tax that the Americans take off of the dividend, but you don't see that and you don't have to do anything. They take that off before you even get that money. But yes, that is taxed in an unregistered account.
Thank you. Is there any difference in tax rate for long-term and short-term gains?
There is not. So when it comes to taxation for your investments, it is when you have cashed them out. So when you have sold your investments is when you're taxed. If you let your investments grow for a long time, nothing happens. If you finally cash it out at the age of 60, that's when it's taxed.
Thank you. We've got just a minute left, so I'm going to try to get through two more.
Sure.
As a newcomer, I have a part-time job. I would like to start saving a small amount per month. Do I directly open a TFSA account with my bank?
Yeah, so there's a lot of different places where you can open up a TFSA. You can open up through a bank, or you can go through an online brokerage. You can open it through things like Wealthsimple. There's a lot of different places that you can do that. If you're looking to invest in it, if you want to work with a financial advisor, you might want to go through your bank or through a firm. And if you want to use a robo-advisor, you might want to look at something like Wealthsimple or Questrade, who has TFSAs you can open up and then have a robo-advisor and you can put your money into it. If you're looking to create just a savings account for your money in a TFSA, you can do that through your bank, easy enough as well.
Terrific. And our last question, how do I figure out how much room I have in my TSFA if I want to open an account now?
Any other questions come through?
One more. How do I figure out how much room I have in my TSFA if I want to open an account now? Oh, I'm sorry, I'm seeing James is frozen. I'm either frozen or he's frozen. Can someone let me know? I think we've lost him. Oh, here he's back. James, sorry, you're muted.
It just closed on me.
Oh yes, I think we lost the last question. The last question was, how do I tell how much room I have in my TFSA if I want to open an account right away?
Great question. So what you want to do there is you want to go to the CRA website, so Canadian Revenue Agency, and log in. When you log in, that will tell you how much money you have in your TFSA as of January 1st of 2021. Very important that you don't over contribute to your TFSA, as any money that goes over your contribution amount is taxed at 1% per month. So it's a lot of money. I just want to remind everyone that if you have any additional questions that I didn't get to today, I am happy to get to them via email. So feel free to reach out to me and I can continue to answer these questions, but I'm available as a resource for you guys. So yeah.
That's fantastic, James. Thank you so much for a great presentation today. Margaret has put a link to our survey in the chat that will allow us to understand your needs and how we can better suit the offerings that we have for financial education to the things that are most meaningful to you. So please take a moment to do that. We would really appreciate it. And James, thank you so much for your support today and your amazing contributions. We'll thank everyone for attending the last session of the CLIP 2021 Financial Literacy Conference, and hope to see you all at a future session.
Yes, and please do reach out to me by email. I'm happy to continue this conversation with you about your financial journey in investing. And I'm sure the organizers of this event today will provide my information as well, so you'll have it there. So don't feel like stressed out if you're trying to find my email address within the chat. I'm always here to help.
There's a quick request that you just enter your contact information in the chat. Would you mind doing that, please?
Yeah. I just did, but I'll put it in again right here. James.ac.ca. There you go.
And I shared with you in chat the email of the individual who asked the question that you thought deserved follow-up.
Yeah, at Gmail. Okay. Yeah, and I'll follow up with you, Ronnie, on that question.
Thank you so much.
All right.
Thanks to everyone, and we'll see you next time.
Okay, take care.